a big week for the bond market. We're already seeing a little bit of tussling around the Treasury funding just this afternoon. Joining me, Collin Martin is the Director and Fixed Income Strategist at Schwab's Center for Financial Research. Collin, I've joked in the past that if you think $20 billion or 100 or maybe a couple hundred make a difference on what the Treasury sells, then, you know, I got a bridge to sell you. But I don't know. I'm starting to maybe get convinced because we're getting markets a little volatile around some of these announcements.
A little bit. I mean, I think you do have to put it into perspective. If you look at today's announcement, I think the number came in 41 billion more than what the consensus expectations were. You saw long-term yields move up a little bit. I think a basis point or two on the 10-year Treasury. But I think if you look at 41 billion in the grand scheme of the Treasury's 30+ trillion outstanding, it wasn't too much. I think what we'll be paying attention to is the announcement later this week about what that breakdown will be, because I think that's being a big question for investors lately. When you look at the coupon issuance, we're seeing these record-setting coupons, and how is the market digesting them? So far, relatively well, but we'll be paying attention to Wednesday's update to see what those coupon sizes look like.
Yeah, I just can't imagine in the grand scheme of things, like it would matter that much, to issue 20 billion or 40 billion extra. But hey, I mean, I guess if the market's got demands, then the market's got demands. We're already on kind of shaky ground with bonds after the last couple of weeks. What about the Fed's potential to move the market? FOMC this week. Collin, take me through what you're thinking.
Yeah, I think there is potential to move it because the markets are clearly on edge about what's the Fed going to look like over the next few months. I think it's less about what's going to happen over the next few meetings, because it seems like there's very little chance that anything happens. So as we go into this week's meeting, we're expecting no change to a policy rate. That's no surprise there. The markets are pricing in a 0% chance of a change this meeting and even the next. We'll be looking at the statement for any updates there about the economy, and will they focus on more of a upwardly revised outlook on the economy because it has proven resilient, and how will they address inflation? Will there be a hint in there about it proving to be stickier? There's no updated projections, so we won't see any changes to the dot plot, although I think it's pretty safe to say that dot plot will be revised next time, given that the median projection was pricing in or projecting 3 cuts this year. That seems unlikely now. So then it'll come down to Powell's press conference, and is he hawkish, dovish, somewhere in between? How is he going to rectify what we've seen in inflation over the past few months? Because what turned out to be a blip. We did see hotter than expected numbers in January and February, but March showed us that, okay, maybe they weren't as hot as those readings, but it's still hotter than we're looking for, and most Fed officials are looking for. So it'll be looking interesting to see how Powell addresses that.
That's where it's such a nuanced thing that it feels like it does leave some kind of range of outcomes that Powell could choose to take, because to your point, maybe not as hot as the last couple months, but still above what they purportedly want and not moving in the right direction off of the highs. So far, he's generally leaned on that directional discussion, right? Are we on the path? Are we making that progress? So is that vector of progress need to be acknowledged as being over? Does he need to come down hard and say, look, it's just been 3 months, or what?
Yeah, he might need to. I think the risk right now is that inflation remains a little bit sticky. One thing we've been saying just a little bit recently is sticky but not stuck, because we do think it should continue to come down over time. The Fed has the tools to do that. But as you alluded to, Oliver, it is still elevated, and the Fed has a mandate. They've committed to bringing inflation down to its 2% target. I think what the markets will be interested in hearing about, and I'm pretty sure there'll be a question about it at the press conference, is what are the not odds, but what is the outlook for more hikes? Because we've seen a few officials talk about that. We've seen an official or two talk about the potential for no cuts at all this year, and they've kind of danced around the idea of a potential for a hike. So it'll be interesting to see how Powell addresses that question, should he get it. That if he does suggest that they're open to anything, that could pull yields up a little bit, because the markets might expect them to act a little bit stronger to make sure inflation does come down.
Okay. Yeah, I mean, if we've shifted the conversation now to where, hikes are even in the lexicon, then we're in a very different world than 6 months ago. What is your view on their ability to make big decisions around election time, Collin? Do we just need to put that aside, pretend it doesn't exist? The Fed's really going to do everything according to, propriety?
We think you can put it aside and pretend it doesn't exist, but that won't stop, headlines from coming out and various market participants and strategists talking about that risk. We think the Fed does a pretty good job of being apolitical, independent, and following what their mandate is and doing what needs to be done to reach their goals. I think they have done a good job of that. I think as we get closer to Election Day, there likely will be more concerns and headlines about the risk of a move as we get closer to the election, what that might mean. But we think the Fed is apolitical. We think they do a good job of maintaining their independence, and we wouldn't necessarily rule out some sort of action as we approach the election if it means it's going to help the Fed reach its goals.
All right. Collin, great conversation. Excellent stage set for a busy week for the bond market. Appreciate the thoughts on today's action, too. Collin Martin, Director and Fixed Income Strategist at Schwab's Center for Financial Research.